All right, welcome back to Stock Tricks with Nick for this week's breakout watch list from May 2nd to May 6th. In this video, I'll be covering 8 stocks that have breakout potential in the upcoming week. We'll be focusing on stocks in strong groups or with volume clues that will lead to stronger uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. Here are the 8 stocks that we'll be covering today. Don't want to spend too much time on this because we got a lot of charts to cover. The first stock that we'll be covering is ARCH. This is an energy and coal, which is right now the strongest group out of 197 in the market. So it's got an A+ group strength rating, an A- accumulation distribution, meaning many of the heavy volume days have come on up days versus down days. The stock's being acquired or accumulated, not distributed. It's got an overall composite rating of 99, along with an individual relative strength rating of 99, both the strongest that MarketSmith gives. Fundamentally, very, very strong. Earnings per share were up over 1,000% in this latest quarter, year over year. Sales were up 143%, and after-tax profit margin up 31%. Taking a look at the stocks within that very strong group, ARCH is second strongest on earnings per share, first strongest on relative strength, and first strongest on overall composite rating. Taking a look at fund ownership, we want to see big money flowing into the stock. That's what creates these strong uptrends that we're seeing. And you do see fund ownership has increased from 285 to 334 in the past year. Looking at the chart, this is in a very strong uptrend. You got the 200-day, the 50-day, the 21 EMA, and the 8-day all in the correct order, all in a nice uptrend. This did recently have earnings last week. We had a nice move up, 21% that day, then followed by an unfilled gap, so more buyers stepping in to purchase the stock, followed by 2 inside candles with with lighter volume than average. So after a very strong move from, let's see, this previous day, we were under the 50-day moving average. Things were looking bad. So we closed that day at 131. From there, we rallied all the way up to 175, and now we're just consolidating with those 2 inside candles. If the market continues weak and this pulls into this 160 area, we have the 8-day EMA, that's where I would want to start a position. Or if we just break to the upside and push to new highs, breaking over the high from Wednesday, that was 176.35, that would be an area to purchase as well. Next, we have an IPO, BRZE. This is in computer software enterprises, 191st strongest out of 197. So it's a very weak group in this market right now. Tech is getting hit very hard, but doesn't have fundamentals to talk about. Very few funds are owning the stock. It actually declined from December to March from 119 to 94. But really what I want to talk about is the higher lows and higher highs that we've been seeing since this bottomed. So when the market bottomed in February, this still had one more push lower, but this eventually bottomed at 3076 right around March 11th. From there, we rallied up to the 50-day moving average, a nice 50% move there, but it was not ready to get going. The market also was not ready to get going. You can see this topped just after the market topped, after the bear market rally here. So we failed at the 50-day moving average. We pulled back, but we didn't put in a lower low. So as the market started chopping lower, this was putting in a higher low, and now you have the 8, the 21, and the 50-day moving averages all around the same price. We had a nice move on Thursday where the stock was up 3.5%. On slightly more volume, 400,000 shares traded. And then the following day, Friday, when everything was very poor in the market, this also had a bad day, down 5%, closing near the low of the day. But it was on very, very light volume, only 166,000 shares traded, and we still managed to close above $40. So what I would be looking for here is a break over Thursday's high, 42.71 as a potential entry point. That would get back over the 8, the 21, and the 50-day moving average. And this is an IPO putting in higher lows along the way as the market made a lower low. We continue with IPOs. Next, we have EE. This is in utility gas distribution, 21st strongest group out of 197. So we got an A group strength rating, 89 overall composite. Does not have accumulation distribution ratings just because it's so early since its IPO. And really, what I want to focus on here is 15-minute candles. You could see a nice cup here, and then we put in some VCP action. When you're trading IPOs, you want to go down to a smaller time frame compared to when you're trading more established names, just because these names are going to be acting a little bit quicker, trading a little bit quicker. So going to a 15-minute candle here shows a nice big cup. And then VCP action, where every decline is getting tighter and tighter and tighter. And now we're forming a pivot Looking for a break over 27.06 with heavy volume. I really like, as this consolidated down, we got moving on heavy volume towards the end of the day on Friday while the rest of the market continued to sell off. So breaking over 27.06, potential entry point for EE. Next we have HRT. It's in computer software security, 63rd strongest group out of 197, so a B+ group strength rating. This has an A+ accumulation distribution rating, a 98 overall composite rating, and a 92 individual relative strength rating. It is another IPO. Fundamentals pretty strong. The last 2 quarters we had earnings per share grow 223 and 171 year over year. Sales grow 57%, then 32%, and after-tax margin improve 11 and 6. Taking a look at the stocks within that group, it's 10th strongest out of 41 on relative strength and number 1 on overall composite basis. Fund ownership, we did decline in December to March from 156 to 142, but as you see with a bunch of stocks, we saw declines from December to March. So the fact that this only declined 14 funds was not as significant as you would expect in a very strong bull market where all of the top growth stocks are seeing fund ownership increase. With this, you see MarketSmith has drawn out a nice cup and handle. It does have earnings in 11 days, so maybe this is one that you wait 11 days, see if it has positive earnings, see if we can get some heavy volume in a breakout type name and really lead this past 1950, break into 20. So maybe patience pays on this one. If you're a quicker term trader and you see the market's been a little bit oversold, it could get worse, but in the short term, we're expecting an oversold bounce in these next couple days. Pulling into the 8-day EMA here at $17 might be an entry point, or breaking over 18 on market strength when we get that oversold bounce for HRT. Next we have JKS. This is an energy and solar, very weak group, 172nd out of 197, so D- group strength rating, but it does have a B accumulation distribution, 79 overall composite, along with a 92 individual relative strength rating. Earnings have been negative, but sales have been increasing 79, and 92% year over year. After-tax profit margins starting to improve a little bit there. Taking a look at fund ownership, a little bit, actually improved December to March. So while many stocks saw fund ownership decline, this actually improved from 158 to 165. Within the group of 21 stocks, it's second strongest on relative strength, second strongest on accumulation distribution, and second strongest on individual or overall composite rating. I want to go to the weekly chart really quick on this because it shows just how quickly a name like this can break out. So last time it based out from September 17th to June 2020. Really nice VCP action here on the weekly chart. And then we had a strong breakout, if you remember, in December of 2020. This basically went straight up for about 20 trading days. You can see 1, 2, 3 weeks of trading there. Taking this from $25 all the way up to $80 in 3 weeks. So looking back at the history of the stock, we know this stock, after it bases out, has the ability to make these very strong moves higher in a very short amount of time. And from that point, we did base out. Nice VCP action in here on the weekly chart again, and we're tightening up once again with the 10 and 40 week moving averages crossing over, providing support. So back to the daily chart. Looking at a potential entry around $50 where we have the 50-day and the 200-day moving average as support, or using that as a stop loss slightly below that at like 48.50. If we break out above Friday's high, that would be 54.73. You're paying a little bit higher there, but if you're buying the breakout after the market's been in a very sharp downtrend, there's a higher probability that that will continue higher. If you're buying against a pullback, against key moving averages, and the market continues lower, there's a higher probability that you'll get stopped out before the eventual move higher. So that's JKS. Next, we have NKTX. This is a biotech stock, 111th strongest group out of 197. These tend to trade very individual anyway, so I don't love looking at group strength when trading biotechs. Because it's also a biotech, you need to take a smaller position size because it does have that gap down risk that typically other stocks do not have. So typically when I'm trading a stock in a strong bull market, I can put 20% of my account onto a trade. With biotechs, I don't usually go over 10%. Looking at this, no fundamentals to talk about. I don't really want to get into the group strength. Fund ownership has been increasing here, but really the story is what happened last week. Massive volume a nice move up on, let's see, what day was this? April 25th, we had a volume run rate of 44.84, meaning 44 times the average volume on this day, where the stock broke out 141%. But as you can see, it failed right at the declining 200-day moving average. We pulled in the next day, but then on lower volume, pushed back to the 200-day, more resistance on Thursday, and on Friday, we hit that area once again, that 200-day moving average. So a close above this would be a character change in the stock after the last 4 or 5 trading days. Looking at a 15-minute candle, you can see just how tight this action has been in this last week or so. So I'm looking for a break over 1865 as a potential entry point for NKTX. Got 3 more stocks for you. If you guys are enjoying the video, please smash the like button and subscribe to my channel. I make a breakout watch list video every Sunday morning and do other trading videos. The next stock that we'll cover is OPCH. This is in medical services, 127th strongest group out of 197. It's got a C- group strength rating, B- accumulation distribution, but 93 overall composite, along with a 96 individual relative strength rating. And really, when we're trading, we should be focusing on the relative strength because that price is what pays. You can't turn in your earnings per share to pay for your rent. Looking at fundamentals, extremely strong in this stock. Earnings per share up 550, over 1,000, 310, and then 950 again year over year for the last 4 quarters. Sales up 16, 14, 15, and 21, and after-tax profit margins improving as well, single digits each of the last 4 quarters. Within the group of 43 stocks, it's 3rd strongest on relative strength, 7th on accumulation distribution, and number 1 out of 43 stocks on overall composite basis. Fund ownership did decline a little bit from December to March, 517 to 515, but overall in a very nice uptrend. This did have earnings last Thursday where we saw that 950% earnings per share growth and a really nice move breaking back over the 21 and 8-day EMAs on heavier than average volume. Only 127% volume run rate, so nothing crazy there, but a nice 12.5% move. This next day, while the market was really flushing, this only gave back 2%. Didn't hold 30. I would have loved it to hold that $30 area as support. But what we're looking for is a break into new highs, breaking over Thursday's high of 30.70 as a potential entry point. Next, we have PKG. This is in paper and paper products group, 32nd strongest out of 197. A group strength rating, B- accumulation distribution, 96 composite, along with a 90 individual relative strength. Earnings per share, sales, after-tax profit margins, all improving over the last 4 quarters. Most recent quarter, earnings per share were up 54%, sales up 18%, and after-tax profit margins up 13% year over year. Taking a look at within the group of 14 stocks, it's 5th strongest on relative strength, 7th out of 14 on accumulation distribution, and 5th on overall composite basis. Fund ownership staying pretty stagnant since September of 2021, 1563, 62, 64. So not a lot of fund ownership coming into the stock. Really what I'm looking at is the higher highs and higher lows as it trends from 124 to 140. Eventually we gap up with earnings per share, breaking over the 50-day moving or 200-day moving average, this black line here. We come back, we test it, 140.13 on March 8th. Then we put in higher highs, higher lows, higher highs, higher lows. We're consolidating, allowing that 21 EMA to catch up. Looking for a break over Friday's high as a potential entry point, 163.82. Or if the market continues to sour, but this holds up around 160, then we can use this ascending 21 EMA as a potential stop loss there around 159, 158 area. Next, we have SGML. This is in metal mining and ores, 19th strongest group out of 197. This is a Canadian-based company that mines lithium. So as the EV industry picks up, this typically is correlated with that. So it's got an A group strength rating, B+ accumulation distribution, 72 overall composite rating, but 99 individual relative strength rating. It is an IPO name, so we don't have too much information on it. So I really want to focus on the charts, but quickly looking at the fund ownership, increasing from 7 in 2021 of March of 2021 to 28 now. We see a nice IPO base here, breaking out. This would have been a beautiful entry on 1156. Did not have this on my radar at the time. That is a miss on my part. But we see a nice quick ascent all the way up to 1946. From there, we pull back to the 21 EMA. You see we bounced right at that area. And then as the market continues to sour, we undercut that low So a nice undercut, shaking out the weaker hands, and then we start to build here under the declining 8-day EMA, but recently we've closed back over the 21 EMA. We're looking for a break over $16 as a potential entry point for SGML. And that's gonna be the breakout watch list for the upcoming week. If you guys enjoyed the video, please smash the like button and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading videos. Big thanks to the sponsor MarketSmith, which was the trading platform that we used to break down each of those setups. If you guys enjoyed the platform, there's a link in the description below where you guys can try it out. And finally, if you wanna hear more from me, give me a follow on Twitter and StockTwits. Those are the two platforms that I post the most, although I am starting to grow my Instagram and TikTok there. Have a great week, and I'll see you guys in the next trading video.